you can understand Bitcoin as digital capital. It is the asset without the issuer. If it's digital capital, then it's going to grow to a $200 trillion plus network over time. And the value to the United States is anywhere from $3 trillion to $100 trillion if the US begins to acquire that network. As digital capital, it can negate or retire the national debt, or it can convert us from owing 40 trillion to owning 40 trillion of net assets. So it's a very powerful financial lever.
The content presented on this podcast does not in any way represent investment advice. The information is provided for educational and entertainment purposes. Crypto assets are considered risky investments. You should always do your own research before investing. The opinions expressed here do not represent those of CoinDesk's editorial staff.
Michael Saylor is a leading Bitcoin advocate serving as executive chairman of Strategy, formerly MicroStrategy, one of the largest holders of Bitcoin with about 500,000 in BTC in its corporate treasury. His bold strategies and unyielding belief in Bitcoin as digital gold have made him an influential and sometimes polarizing voice in both tech and finance. Michael, welcome to the show. Thanks for joining us.
Yeah, thanks for having me.
It's been an exciting year for you. Most recently, you've unveiled a $100 trillion crypto strategy at the White House. You've been promoting it in the crypto industry. Maybe we can start off with telling us a bit about what's behind this and why America needs to subscribe to this.
You know, I've been watching the industry for the past 4 years or so. And I think there's been a lot of confusion, a lot of controversy, a lot of conflict, and confrontation that was all unnecessary. And it was unnecessary because of a sort of a lack of vision and a lack of creativity amongst the policy makers and the participants. So, for example, in a world where the only assets that exist are securities and commodities, and in a world where it's impossible for any innovator to issue a security, then everything has to be a commodity. And that means a token is a commodity, a currency is a commodity, a tokenized security is a commodity, and a commodity is a commodity. So what we had was people very confused thinking, well, is Bitcoin a currency competing with the dollar? Or is Bitcoin something different, a store of value competing with gold? And then is Bitcoin competing with Trump coin or any other token or not? And what's the next Bitcoin? And so I think the crypto industry was at odds. A lot of people that want to be issuers of tokens are forced to go through this kabuki dance of pretending they're decentralized when they don't really want to be decentralized. What they want to do is access the capital markets, and they haven't had a way to do it, and we haven't had that discussion. So in my framework that I've laid out, and this is after hundreds of meetings and talking to people in the Senate, in the House, in the SEC, in the CFTC, in the White House, every industry participant, all the Bitcoin investors, all the crypto investors, all the crypto exchanges, all the policymakers. After lots of conversations and after listening to every word uttered by Gensler, by all the regulators, after listening to every minute of congressional testimony, here's my opinion. My opinion is the industry will move forward in a cheerful, constructive way with the greatest good done for the greatest number of people on Earth if we define 4 new asset classes. And they would be a digital token, a digital security, a digital currency, and a digital commodity. And those 4 new asset classes would rest atop 3 20th century assets: securities, commodities, and currencies. I don't think we really want to change the definition of 20th century assets. There's just too much inertia. You can't change 100 years of securities case law. And you don't want to change the way the world trades commodities like silver and soybeans. and trying to deal with changing the definition of currencies issued by nation state. That's too jarring. So the right way to handle this is simply to say, we want to allow digital tokens to be issued by 400 million businesses, ideally in 4 hours for $40, right? And what's the use case of a digital token? It's for capital creation and for innovation. So let Trump coin be issued, let Katy Perry token or Joe Rogan coin or any token, whether it's a smart contract token or a utility token or a meme coin, or maybe it gives me access to, to a music library on a website, or maybe it gets to be a hyper complicated, token or NFT, some digital utility or some right that just stops short of being a security. And there's 400 million people that want to do it, and they want to do it in 4 hours for $40. And the reason that they can't issue a security to raise capital is because securities take $40 million, an army of lawyers and accountants in 4 years, and then you got to pay $10 million a year to stay compliant. And so, and even after you do all that, securities would only trade 9:30 to 4 on a few markets. They don't trade globally, worldwide, 24/7. So tokens solve the problem of giving capital markets access to hundreds of millions of corporations. And that's a profoundly important thing. If you have no money and you want to start a business, or you're a podcaster and you somehow want to raise capital from your customers or from investors to change your business, or if you want to innovate and say, I'm going to have a podcast that has 2 layers of access, the free version and the tokenized version. If you buy the token, you get the inside scoop and you get the comment. And if you take the free version, you don't. So if you want innovation and you want capital creation, you need that. But you need a legitimate path to do that. And so that's missing. The debate for the past 4 years was, well, if you want to be an issuer, then you have to register with the SEC. And then, of course, it's illegal to trade. Okay, that doesn't work. Or you can't be an issuer. So if you pretend that you issued the token, but then you pretend that you're not the issuer, you don't control it, and it's decentralized, I won't sue you. Well, that doesn't work either, because the truth is 400 million entrepreneurs want to issue the token, raise money overnight, and use the money to do something good. So we don't have a digital token asset class in the United States. There isn't one recognized in the world. We need one. As soon as we have one, you'll see an explosion of innovation there.
How do you balance that innovation with consumer protection? Because we did see this explosion of, in the ICO boom, initial coin offerings, where innovators were able to create their own token, raise money for their projects, but a lot of them, most of them ended up being scams, and people ended up losing money. So that's where we see the regulators coming in and taking their hammer, perhaps a little heavy-handed.
What I'd point out there is we should just have a very principled framework, and the observation would be, if you want to issue it, you have to actually register that you're a person, right? You can't have like an anonymous secret organization issue it, because there's no one to sue. So an issuer should actually register the token. They should lay out the utility. There should be a standard data structure. It could be hosted by crypto exchanges or by the industry. And then when you issue the token, you say, this is what the token, this is who's issuing it, this is how many there are, these are the rules, this is the utility. And then the issuer ought to be civilly and criminally liable for fraud. Basically, do not lie, cheat, and steal, and you're responsible for the damage you do. That's just a biblical piece of guidance. And I think that you just let the free market determine that, because what will happen is if someone does defraud someone or steal, they're going to get sued, right? If you issue a token that results in the death of a person, you're going to have a criminal manslaughter charge against you, right? So there ought to be civil and criminal law, and there ought to be consequences for the issuer. But I don't think, and here's the point, I don't think you ought to have to take 4 years and ask permission from a governmental agency before you issue the token. If you think about the metaphor, you don't have to wait 4 years in order to post a tweet. You don't have to wait 4 years in order to create a product. You don't have to wait 4 years to take a trip or drive a car. Like if I told you had to wait 4 years and spend $40 million and then spend $10 million a year on an insurance policy before you can drive a car because a government regulator wants to make sure that you don't hit some kid crossing the street, nothing would move. The truth of the matter is, if you hit a child crossing the street, you are criminally liable. And if you slam into someone's bakery, you're civilly liable. So there are consequences to driving a car, but it seems utterly silly for the government to say that everyone has to apply for permission to say something or do something, whatever that might be, out of an abundance of caution to protect the consumer. So I think that you should just have consumer protection laws, just like every other product that is created in a free market.
So do you envision a new regulatory agency overlooking this new set of digital asset classes?
No. If you were to tweet something that's a lie right now, we don't have an agency, right? You could be sued for libel or slander. If you drive your car into me crossing the street, we don't have a new agency. And if you start a bakery and if you bake muffins that have poison in them, right? We don't have a new agency, right? You don't need to create a new agency for consumer protection. We've already got courts. We've already got criminal statutes. You're not allowed to kill people. You're not allowed to steal from people, right? So you don't need a new agency. We've already got the law. So my view on digital tokens is we ought to just let issuers issue the token and hold them liable for the damage they do. In egregious examples, there'll be criminal liability. Someone will go to jail.
So it's the issuer that would have the liability because they're doing, I guess, the KYC of the people who want to release these tokens?
The issuer would have liability, but not for KYC. I think that with these digital assets, all the digital assets ought to circulate freely, friction-free, at the speed of light, at the speed of a computer. So a digital token, a digital currency, a digital commodity, and a digital security all should circulate. No KYC, no AML, friction-free. That's how you're going to make the economy work. But the issuer should have liability for fraud. So if the issuer says, I'm selling 10 million, CoinDesk tokens, and then you actually dump 1 billion CoinDesk tokens, it's fraud. You could call it wire fraud. You can call it consumer fraud, right? It's kind of very straightforward. I don't think we need more. And again, if CoinDesk issues a token that pays off on the murder of me, right? Well, that's criminal act, right? So maybe you're breaking a criminal law and you ought to be liable as the issuer. But I don't think you need any other agency, right? And that's the point of a digital token. We should see 10 million tokens issued. And by the way, you're right, most of them will fail. Just like 10 million people tweet every morning and most of the tweets don't go anywhere. And 10 million new mobile apps get created, or millions of Chrome extensions and millions of iPhone apps. Most of them fail. Most businesses fail. That's okay. Like 99% can fail, 1% will be revolutionary and they will change the world. And I think the whole point of the capital market is people ought to be free to innovate, right? And the problem in a socialist environment where the government decides is that no one has any freedom to do anything, right? At some point when the government tells you can't create a business, you can't speak, you can't drive a car, you can't move, you can't create a product, right? You end up with sort of a collapse. So let me move on from that though, because I don't think we want to spend the entire interview talking about just digital tokens. I think that if you go to digital currency, the real point is An issuer, a corporation, whether it's Circle or Tether or a bank, ought to be able to issue a digital asset that's backed by currency. So if I want to sell $1 billion of digital stable coin, I ought to have $1 billion worth of currency in a bank. It ought to be one for one backed, right? And that's not the same as a stable coin. Like, it's not UST backed by Luna, right? It's not, that would be a token, by the way, right? If you create a token which you purport to be stable at $1, I mean, okay, you're kind of a fool to trust it. But if I create a digital currency, then I issue $10 billion and I buy $10 billion of treasuries, and it ought to be sort of a regulated entity. And the issuer ought to be liable to the government and ought to be liable to the buyer for fraud, right? And that's kind of very straightforward. But then the digital currency ought to circulate friction-free at the speed of light. And the benefit of that is that the stablecoin industry will go from 50 billion in the US to 10 trillion. And we will export $10 trillion worth of US dollars to the rest of the world. And probably everybody in Africa and everybody in Asia will start using the dollars. Maybe the Europeans will flip to the dollar, right? It would be great for the world's reserve currency. And so, and it would be great for the 8 billion people on the planet that have to use a defective currency as a medium of exchange or a short-term store of value.
So if the digital economy relies on stable coins, why do we need Bitcoin? I know you're the master of the Bitcoin reserve strategy. So tell me where that enters the picture.
Yeah, because if you think about money, money decomposes into currency and capital. So if you live in Argentina and by law you're required to pay your tax bill in pesos, you're going to need ARS. You're going to need local currency. And if the currency is losing 20, 30, 40% of its value a year, then you would hold that for 4 weeks. Then if you needed money for the next 4 weeks to 4 years, call that midterm money, you'd probably want to buy the dollar. So you would have in your checking account USD. You wouldn't hold Bolivar, you wouldn't hold Naira, you wouldn't hold any of the really weak collapsing currencies. You wouldn't hold any Syrian or Afghan or Iraqi currency. So in that case, you always want to hold the US dollar. But if you need to hold the money from 4 years to 400 years, there is no institution or wealthy individual that would ever claim that the majority of their assets are held in dollars or pesos. They're holding capital assets. And those capital assets are split between 3 things. They're either holding bonds. You might be holding corporate bonds. You might be holding treasury bonds. Or they're holding real estate. You're probably owning a building or property or a home or some other tangible physical asset. Or you're holding private equity. I own a company. Or public equity. I have a portfolio of Magnificent Seven stocks or S&P index or something. So think about all the wealthiest people in the world: Elon Musk, Jeff Bezos, Mark Zuckerberg. What percentage of their wealth is US dollars? It's not even 1%, right? So Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world. Right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17% of that. And the primary competitors of the dollar are CNY, Euro, and JPY, Yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets. It will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money. And so that's why it's important to understand this idea of digital commodity, because the use case of a digital commodity is not capital creation. That's why all the altcoiners, that's why they don't get, if you have zero money, you can't buy Bitcoin. So if you have zero money, but you're a podcaster, you need to issue a token to raise money. So capital creation is a use case of a token. The use case of a digital commodity is capital preservation and appreciation. If you already have money and you want to store your money for 100 years without worrying about risk, then you want to put it in a savings account. And so traditionally, the king commodity as a long-term money was gold. And what happens is gold demonetizes silver, and silver demonetizes copper, and copper demonetizes glass beads, and they all demonetize the giant stone coin of the Yap people or bales of tobacco. And so Gresham's law says the strongest money wins. In the end, there can be just one. We're all going to go to the strongest form of money. So the strongest form of long-term money, which I'll call capital, is Bitcoin right now. And all these other assets are going to be traded in for Bitcoin. And there's no point creating a second or a third Bitcoin because there's only one network that's going to win. The rest are just going to collapse against it. But the real point here is you want a commodity to be a store of value, and it needs to be an asset without an issuer. And so if you look at all these asset classes, what you have is digital tokens, an asset with an issuer with very light regulatory touch. You can issue it overnight. A digital currency is an asset with an issuer, but it's just pegged to a nation state currency. A digital security is an asset with an issuer, but it's really tokenized stocks or bonds. So it's like BlackRock releasing tokenized Apple shares or BlackRock releasing tokenized S&P index. It would be a token that circulates on a crypto exchange at the speed of light 24/7 globally, but does have an issuer. And Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. And you can see if you lay out this taxonomy, there's 4 quadrants. You need them all. You need short-term money in order to make payments. You need tokens to create capital. You need to tokenize securities, because otherwise, how do you innovate or create more efficiency in the world capital markets? And then you need a commodity to store and protect your capital. And once you see all 4 of them, you realize they should all be designated as new asset classes. The rule ought to be the issuers have an obligation to not lie, cheat, and steal. They're responsible for the damage they do. The exchanges should have the ability to trade these things at the speed of light with anybody or anything, any machine. And then they should have obligations. Don't lie, cheat, and steal. Don't assume a conflict of interest. And then the holders ought to have a right to self-custody. You ought to be able to own your assets, custody your assets, and transfer your assets freely. So I think that what we all agree with is there ought to be no AML KYC frictions on asset transfer, because that destroys the utility of all these digital assets. And to the extent that you want to enforce consumer protections or investor protections, you should put the obligations on the issuers, and that way the economy starts to grow very, very rapidly.
In your plan, the U.S. should acquire 5 to 25% of the total Bitcoin supply by 2035 to generate between $16 to $81 trillion by 2045. I'm wondering, what has been the reception of your plan at the White House by U.S. President Donald Trump? And I'd like to hear you talk about why this is a national security issue.
I think the last 2 weeks have been extraordinary for Bitcoin and for the Strategic Bitcoin Reserve, because momentum is really building. 2 weeks ago, there were 3 priorities, or there were 3 things talked about in the digital assets universe. A stablecoin act, right? The Genius bill, and a bill to create stable coins and issue them in the U.S. And that really addresses the digital currency asset class. And then there's discussion of a market structure bill, and that's to create an entire digital assets framework, presumably to issue something akin to digital tokens or tokenized securities, digital securities. And then there is the Strategic Bitcoin Bill, or the Bitcoin Act. That was the 3rd priority. And it was a question mark of where that was in DC. There was support, but people were wondering. What happened in the past 2 weeks is the Strategic Bitcoin Reserve got elevated to a primary, if not the primary priority, with the executive order. So the president created it. And I think there are some very important things that happened. On Thursday night, about a week ago, the president issued the executive order creating the Strategic Bitcoin Reserve. And in the executive order, designated just Bitcoin to go in the reserve, said we should never, ever sell it. Don't sell the Bitcoin. And then directed the Secretary of Commerce and Treasury to look for budget neutral ways to acquire more Bitcoin. That was the strongest endorsement of any asset, I don't know, in 100 years, I think, by a president of the United States. You could imagine if the president has said, I'm directing the government to acquire silver and never sell it, and I want to buy more silver, or pick any asset, it would have been an extraordinary announcement. I think that was followed up by the Digital Assets Summit. And in the Digital Assets Summit, the president reiterated those points, and the Secretary of the Treasury and the Secretary of Commerce and Small Business Administration all were present and reiterated their support. That actually was quite amazing, along with all of the industry leaders being in one place at one time, and of uniform mind. I think Friday night, after that summit, I think the most important thing said in this industry in 4 years was said Friday night, and I think it missed a lot of people's attention. I don't think people really realize what happened. David Sachs, the crypto czar, went on the All In podcast. And on the All In podcast, he said unequivocally that the U.S. government only recognizes one crypto asset as being decentralized. So what Sachs said was Bitcoin is a decentralized asset, a store of value. That's why it's in the Strategic Bitcoin Reserve. It's the only one. And so what you had was a member of cabinet responsible for digital assets policy, in essence, providing very clear guidance that Bitcoin is a digital commodity, an asset without an issuer. And that's the policy of the United States and the president of the United States. And I think for 4 years, Gary Gensler at the SEC implied that, in 100 different ways, implied that Bitcoin is a commodity and nothing else is. But he implied it in a fairly obscure fashion that was kind of not very constructive, because he implied it by suing everybody else. What you had here was a different administration articulating it, but in a constructive fashion, because what Sachs said is Bitcoin is the asset without the issuer. If there are other crypto assets in the future that prove to be decentralized, we will consider them when the time comes. So we're not dismissing the possibility there would be another commodity, but right now we recognize one, and our agenda is to provide a legitimate framework to issue digital currencies, digital tokens, and digital securities. And of course, the president directed that should come to his desk by August. He said, I want to see it by August. He's actually said in the first executive order, he said within 6 months, so by late July. But basically,
well, under that requirement that there is no issuer, I don't think any cryptocurrency would really qualify. Is that your estimation?
No, one does.
Oh, except Bitcoin.
Bitcoin qualifies.
But any other ones?
Well, that's been the debate for a decade, right? And it's been a massive debate and a massive source of confusion, which is, are there other digital commodities? And the position of the previous administration, Christine, was you're either a commodity, in which case you can trade on a crypto exchange legitimately, or you're a security, in which case it's illegal. We're going to sue you, shut you down, or jail you. You see, so we had a false dichotomy, and in that world where you're either going to die, the best case is economic death, and you're blocked from the banking system. By the way, everybody's blocked from the banking system, even Bitcoin.
Sorry. So, Michael, if I'm understanding this, you don't think any other cryptocurrency qualifies to be in a strategic reserve in the United States other than Bitcoin because of its decentralization and it has no issuer?
I think there's only one universally acknowledged digital commodity in the world.
Okay.
Right? There's only one. There's Bitcoin. I've said that, right? There is no second best. I've implied that and said that, and I've spent $33 billion based on that. So yeah, it was my view 4.5 years ago. There's one digital commodity. But Christine, there's a more important point here. Even if there was a second, third, and fourth, like let's take the fork wars, Bitcoin Cash, Bitcoin Satoshi Vision. Even if you fork Bitcoin and you maintain that's a commodity, they're all going to zero if the use case is store of value or cap or money, right? Because if you were to fork Bitcoin and claim it's decentralized, the free market is going to pick the strongest network, and it's going to be monetized, and everything else is going to zero. So it doesn't matter from a practical point of view. My position is not that you couldn't theoretically create another digital commodity. For example, if China forked Bitcoin and declared China coin, and then said it's legal to mine China coin and it's tax-free to hold China coin and you can bank China coin in China, in theory, the power of a nation state could create digital property in China. Just like for example, I acknowledge that real estate in China is an asset without an issuer. I just don't want to own it, right? Like an American doesn't want to own Chinese real estate. An American wouldn't want to own China coin. But in theory, if you understand the economic theory of a crypto commodity, you could create it. It's just very unlikely at this point you can ever create a global money that's a crypto commodity, because Bitcoin has $1 trillion of smart money behind it. And the next best thing doesn't have even 1%. I mean, less than 1% of that.
Friends, DeFi is having a moment. Uniswap Labs web app and wallet connect you to the excitement. Swapping and bridging are simple, low cost, and lightning fast across 13 chains, including Base, Arbitrum, and Unichain, the new Layer 2 network designed for DeFi. Thanks to deep liquidity on Uniswap protocols, you get minimal price impact on every trade, now with even greater efficiency through Uniswap v4. Swap, send, on-ramp, off-ramp, and bridge into a bright future. Get started at uniswap.org.
I wanted to touch on the question about why is this a national security issue?
In my speech at the National Press Club on Tuesday, I covered this in a 30-minute presentation for the Bitcoin Policy Institute, and I would encourage anyone to go grab that. It's on my X profile. I posted it. The point that I make is that there are four different metaphors, four different ways to understand the Bitcoin network. You can understand Bitcoin as digital capital. It is the asset without the issuer. If it's digital capital, then it's going to grow to a $200 trillion plus network over time. And the value to the United States is anywhere from $3 trillion to $100 trillion if the U.S. begins to acquire that network. So, as digital capital, it can negate or retire the national debt, or it can convert us from owing 40 trillion to owning 40 trillion of net assets. So it's a very powerful financial lever. And the companies in the United States, like my company, they're capitalizing on Bitcoin. They're going to be worth 20 to 40 trillion dollars just on their Bitcoin assets if they continue to capitalize. So understood as digital capital, Bitcoin is enriching the corporations and the government itself, depending upon how much Bitcoin those entities own. That's the first metaphor. The second metaphor is Bitcoin is digital property. If you think of it as gold or cheese, nobody rents their cheese or mortgages their cheese. But when you think of it as owning 100 acres in Manhattan, if your family owned 100 acres of Manhattan 100 years ago and you owned it this year, and I asked you, what's your family doing with it? How are you going to pay your bills? You wouldn't say, well, we're going to sell our property in Manhattan. You would say, we're going to rent it, we're going to develop a building on it, or we're going to borrow against it. We're going to finance it. And so you would generate billions and billions of dollars off of 100 acres of real estate in Manhattan without ever selling it. It's property. And so Bitcoin as property means you will be able to rent it, finance it, or build businesses on top of it in the cyber economy. That would be worth $10 trillion to the United States in 2045 each year. Right? We could generate $10 trillion off of the digital property that the United States buys in the strategic Bitcoin
pay off
reserve.
The national debt?
Well, you wouldn't be a national debt. You would basically flip from being a net debtor to a net creditor, and you would generate yield. So that's a very powerful idea. Just like the company that owns $100 billion worth of real estate generates billions and billions of dollars of rental income a year. Or if I have $100 billion of capital, I can generate $5 billion a year just loaning the capital out.
Would that require the rest of the world to also acknowledge the value of Bitcoin? I mean, what if China and Russia and other countries, BRICS countries, decide to create their own decentralized currency? They say, Bitcoin is too influenced by the Americans now. Let's create our own.
Yeah, so the point is everyone that's tried it has failed, and everyone that tries it probably will fail against Bitcoin. Bitcoin is the winner. It's the orange dwarf. It's got the network effect, and it is the most powerful global capital asset and global property asset. So if you think about, let's take every country in Africa. You think there's a country in Africa that can launch the next Bitcoin that won't collapse against Bitcoin? Now take every country in South America. Is Brazil going to be able to launch an asset that you would want to own more? No. Now take every country in Europe. The euro is the second largest currency and the best currency in the world other than the dollar. 99% of the demand for digital currency in Europe is for the dollar. Okay, so the Europeans can't even compete against the dollar. Will the Russians be able to launch something? No. Will the Chinese? No. Why? Nobody in China wants to own anything in China, Christine. How do I know that? Because there's a law, right? The Chinese make it illegal to move more than $50,000 of capital a year outside of China. If the Chinese drop the capital control, all of the capital in China would flow out of China. And so there will be geopolitical jostling, but Bitcoin is already the winner. It's reached escape velocity. And if the US government begins to acquire it aggressively, not only are they a beneficiary, but they will force every other country on earth to adopt Bitcoin as the global capital. In fact, what will really happen is the Japanese, the Canadians, the Mexicans, the Brazilians, all the Africans, all the Europeans will immediately, well, not immediately, they will inevitably, is the right word, inevitably begin to convert their physical and financial capital into digital capital on the Bitcoin network. It becomes a fait accompli. They almost can't stop it, right? So it's one of those geopolitical moves that when you embrace the network, you force all of your allies first to adopt it, and then all your enemies have to adopt it. There's 4 different metaphors for Bitcoin. There's digital capital, there's digital property. The third important metaphor is it's a digital energy network. And the AI economy is going to be built on digital energy by moving energy, money at the speed of light, at the speed of a computer. It's a $100 trillion economy. There is one digital energy network. If you own it, if you control it, you control and participate in that $100 trillion economy. If you don't, you're locked out of the economy. The AIs are going to think a million times a second, and they're going to want to trade a million times a second with each other. You can't do it without a digital monetary network, and that'll be built on Bitcoin as the settlement network. So if the entire future of the banking system and the digital commerce system and the AI economy, it's all going to be based upon digital money, digital energy, digital capital. And so that's important. And then the fourth metaphor is it's a digital defense system, because the measure of power in cyberspace is the exahash. If you want to create a system that can't be corrupted, censored, tampered with, or hacked by an AI or by another computer, you need raw power combined with the power of cryptography, a wall of digital energy or encrypted energy. And so if I wanted to send $10 billion into a war zone, the only way to do it is with Bitcoin. If I want to lock down a cyber system against cyber attack, where I want to authenticate it and make it tamper-proof, what you want is public-private key cryptography embedded into the Bitcoin blockchain, backed by 20 gigawatts of electricity, 850 exahash. No one can crack that, right? And we have a situation today where Satoshi could prove to you in 1 second that they are in possession of $80 billion worth of capital by simply signing a message with their private key. That has profound cybersecurity implications for the country. So when you put them all together, right, digital capital, digital property, digital, energy, and digital defense, what you can see is that you either are going to own cyberspace, and owning cyberspace is owning the asset and controlling the network, controlling cyberspace, or your enemy does. And if you lose control of your airspace, you get bombed back to the Stone Age in 1 week. You lose the country. If you lose control of the sea lanes, you lose the country. If you lose control of cyberspace, not only can you not send money between New York and Tokyo, you can't send money between New York and Chicago. You can't even send money between your computer and the computer in the same room next to you in a secure fashion. So in this case, the reason this is important to U.S. digital supremacy is the future economy is digital intelligence, and it's going to need to move digital energy protected by digital power in order to engage in digital commerce. And Bitcoin is that digital energy network, and that's why it's in the best interest of the U.S. to own it.
You're also calling for ending hostile and unfair tax policies, and there has been word of a zero capital gains tax being applied to Bitcoin and other American cryptocurrencies, according to Eric Trump, the son of U.S. President Donald Trump. Wondering what your thoughts are in regard to this.
If you had a tax that basically taxed everyone when they started a fire, or they used electricity, or they put gasoline in a car, you'd pretty much tax yourself back to a Stone Age barter society, right? It'd be pretty stupid. And so taxing digital power, which is the current tax treatment of Bitcoin miners. We actually tax Bitcoin when it's mined, not when it's sold. It's kind of like taxing an entrepreneur when they come up with a new idea before anybody buys it. It's pretty crippling. So I think we have hostile, unfair, irrational tax policies that impair the industry. I think clearly we want to change those. I think that we have blocked the industry from the banking system. That's kind of foolish. If you prevent banks from banking Bitcoin, it means the Bitcoin eventually will go to whichever bank in the world is willing to bank it. All of the crypto crashes, the crypto winter, the failures of FTX and Genesis and Three Arrows and BlockFi and Celsius, all of those failures were because the regulators prevented legitimate banks, well-run banks, from custodying Bitcoin. And so they drove everybody to crypto cowboys offshore that were run by entrepreneurs or shadow banks. And if they simply allowed actual banks, if they allowed public companies like Apple or Google, or if they allowed big banks like JP Morgan and Morgan Stanley to handle these assets, we wouldn't have had those crypto crashes. We wouldn't have had those failures. Those people wouldn't have lost their money. And so what we want is supportive regulation. We want to unwind all of the hostile, regressive policies which prevent big tech and big banking and big insurance and big finance from handling these assets. And then we want to roll forward the path to legitimacy. If you do that, the industry grows by a factor of 100, and the risk to the consumer and the investor falls by a factor of 100. It's fairly straightforward.
You've said on plenty of occasions that Bitcoin in price is going to go up forever. In your latest presentation, I saw that by 2045, it'll be about $13 million Bitcoin. That's the base case, and $49 million in a bull case and $3 million in a bear case. When will Bitcoin, in your view, or will anything derail that trajectory, in your view?
No, I don't think so. I think that when I gave that speech, it was Bitcoin Nashville in July of 2024, and I gave those forecasts. And obviously, I gave them, there's a model, Bitcoin 24, it's published, it's on GitHub, just go Google it, download it, and you can plug in all your own assumptions about inflation and innovation. The two big drivers of Bitcoin price going up are innovation and inflation, right? Bitcoin's going to go up because capital is going to be created by technology. And as the world gets richer, the capital is going to have to find a home. And Bitcoin price is going to appreciate because there'll be more currency, more dollars, more pesos, more rubles, more everything. And the price is going to appreciate because people are going to sell their 20th century physical assets and financial assets and the like in order to buy digital assets. And that trend is going to accelerate as people get educated, because why would anybody want to own a warehouse in the middle of Africa when you could own the equivalent amount of Bitcoin? They're all going to trade when they can. It's just going to be a question of supportive institutions. Give me a safe way to buy $1 billion of it, and then supportive regulations, and then education. So these are all things that are simple to predict. And that was my prediction in July of 2024. But look what happened since then, right? Since then, we had a red sweep. You had a pro-Bitcoin Congress, pro-Bitcoin Senate, pro-Bitcoin House, pro-Bitcoin president. You have every cabinet member, or nearly every cabinet member, owns Bitcoin, is pro-crypto. They're all very supportive. And now you have a supportive Secretary of the Treasury. You have one executive order, directing that we create a vibrant digital assets industry in the United States. You have a second executive order creating a strategic Bitcoin reserve. You have a huge amount of momentum. What I've seen is a sea change over the past 16 weeks. Most conventional investors and traditional investors everywhere in the world that were not interested or afraid of this asset class, they have all flipped their view to being very curious. So I've been invited to conferences in South America with the 100 wealthiest families for the first time. I've been invited to speak to all the Middle Eastern sovereign wealth funds for the first time. I've been invited to speak at Morgan Stanley's tech conference, the most prestigious one in the tech industry of tech investors, for the first time. I've been invited to speak at CPAC, the Conservative Political Action Committee, for the first time. I've been invited to the White House to speak to the President of the Cabinet for the first time, right? And so there's that speech that I gave on Tuesday at the National Press Club on, there were 2 senators on stage with me for the first time. And so what you have is an avalanche of institutional interest by mainstream policymakers, business leaders, investors. And if you roll the clock back 16 months, none of it existed. The number of institutional investors invested in spot Bitcoin ETFs went from 6 to 3,300 over 12 months. So I would say that institutional adoption is clearly afoot.
Yeah.
All of the regulators in the world will talk about digital assets and they'll talk about Bitcoin. They won't do anything until Washington, D.C. financial regulators take a position. And so the future of digital tokens, digital currencies, digital securities, and digital commodities will all emanate from Washington, D.C., and every other financial regulator and every banking regulator everywhere in the world will follow. And I'm not just talking our allies, the Brazilians, the Emiratis, the Europeans, our enemies or our quasi-enemies or our frenemies, the Chinese, the Russians, everyone is going to copy the taxonomy and the principles that are set in the United States. And I'm not speculating. I'm telling you from first-person knowledge because I talk to them. I'm saying I talk to people in South America and they say our banks will not embrace this until the U.S. does it. And so the entire industry has been frozen up until November 5th. And on November 6th, we thought things might get better. But if you look at the parade of positive actions that are good for the digital assets industry, good for the crypto industry, good for Bitcoin, I think it's exceeded everybody's expectations. I don't think anybody expected, every member of the cabinet to be pro-crypto, pro-Bitcoin. Every member of the cabinet. There isn't any, it's one thing to say, well, we elected a president that stopped suing us, right? Ended the war on crypto. But we went from a war on crypto to every crypto enforcement action getting unwound day by day to now a very, very positive, not just positive in an ambiguous way, positive in a decisive way. We're going to do this. We're going to do this week. Next week, we're going to do this. In 6 months, you better do this, right? That, I think, is a reason that everybody in the industry ought to be feeling very optimistic, because these are the most auspicious developments in the last 12 weeks that have happened in the entire history of the industry.
Or it could be a concern if in 4 years we have a new administration that thinks very differently.
I'm not so concerned about that. I think that Pandora's box has been opened. And if you look at these developments, they tend to be one way, just like a hash function is one way. There are certain things that once you've done them, you can't undo them. Once you've seen it, you can't unsee it. I'll give you an example. When the spot Bitcoin ETFs were approved in January of 2024, that opened the entire floodgate, and now 3,300 institutions own this, and we went from nothing to $150 billion. You can't undo that. You know, a future president or head of the SEC could never say, in 4 years, there'll be $500 billion in these things. They can't say, well, I just decided that Bitcoin isn't a commodity anymore. It's just too much in one direction. And once banks start to bank Bitcoin, when Bitcoin spreads through the banking system and there's $1 trillion of digital capital in the banking system, it won't just be in the US. It's a virus. And so the virus spreads. And in this case, that means you're going to have hundreds of banks, then thousands of banks, then trillions of dollars that are held by 1 billion people. Okay, so a new president gets elected and maybe they don't like Bitcoin. You can't take $1 trillion out of this system. So it's kind of like a new president saying, I just, don't think that we should have the flu. Well, I mean, or I don't think bunny rabbits should, be able to romp across the continent of Australia. You're not going to put, the genie back in the bottle. These things are viral, exothermal. It's a fire in cyberspace, and it spreads very rapidly.
There is a question I wanted you to reflect on generally on government. In the United States, we have these short-term time horizons that change with administrations. We have lawyers, businessmen, entertainers as presidents, whereas in other countries, they have engineers. They have 25-year time horizons. Is that a limitation of American government?
I think if you read the Bitcoin Act put forward by Senator Lummis and Congressman Begich, they specify a 20-year minimum holding period for Bitcoin. And the President of the United States has said, never sell your Bitcoin. I think those two utterances by the politicians most heavily involved here are incredibly visionary and auspicious and principled. And so I actually believe that the United States has some very principled leadership that has an ambition to make this nation great, not make this nation great for 4 years. I think the goal is to make this nation great throughout the 21st century and thereafter. And I think that's the promise of Bitcoin, digital capital. It's the promise of digital assets. It's, and I laid out in my strategy, I said, we can create $100 trillion of wealth for this nation. We need principled leadership. We need a rational digital assets framework, and we need to remove, crippling restrictions that prevent innovators in the economy from moving forward as fast as they possibly could.
I wanted to go back to earlier this year. I was at your Bitcoin New Year's Eve party celebrating Bitcoin surpassing $100,000. It was a peak moment for many in the Bitcoin space. It was really interesting going through Villa Vecchia, your home. I saw Bitcoin historical artifacts. There was a laptop by Druidians from 2009, a lot of nautical artifacts. And a lot of this has to do, I suppose, the nautical aspects, I guess your history of traveling, exploring, and whatnot. I was wondering what your family upbringing was like.
My father's a career Air Force non-commissioned officer, and retired as a Chief Master Sergeant, the highest enlisted rank in the U.S. Air Force. I lived on Air Force bases my entire life. So it's a military family, a military upbringing. We traveled all around the world. I lived in New Zealand. I lived in Japan. I lived on a bunch of Air Force bases in the Midwest. I was born in Lincoln, Nebraska. And went to school at Patrick Air Force Base and Satellite Beach for a while, and eventually at Wright-Patterson Air Force Base, where I was in high school. So I would say fairly straightforward Air Force family, Air Force brat, they would say. Then I got an Air Force scholarship, and I went to MIT on an Air Force scholarship, and I was commissioned as a second lieutenant of the United States Air Force. I ended up serving the Air Force Reserve, and I ended up as a captain in the Air Force Reserve. And so I would say a lot of my upbringing had that Air Force root in it.
Does that Air Force upbringing also talk about or touch upon, I don't know, some thrill-seeking element, some adrenaline rush in your attraction to Bitcoin and the ups and downs of volatility associated with it?
I think that the Air Force elevates and idealizes the engineer, right? I mean, the Air Force is all about engineered aircraft and technology. So technology is a pretty important principle in the Air Force, and I think it gave me a lot of appreciation for flight, for engineering, for aerospace design, for spaceships, and that's why when I went to MIT, I studied aerospace engineering and spaceship design, and so that gave me an appreciation for systems engineering. And in systems engineering, you study higher order systems, feedback systems, servo mechanisms, cybernetic systems, and obviously mechanical engineering, civil engineering, all sorts of engineering, electrical engineering. And so when I finally discovered Bitcoin, I think I appreciated it as an engineered system, right? It's full of really, really powerful, elegant engineering structures that made it stable, right? Something like the difficulty adjustment is a first order negative feedback loop, a servo mechanism. It's the same principle you need to make a steam engine work, by the way. It's the same principle that pops up in all sorts of machines. It's a principle in electrical engineering, and it's a principle in all kind of nonlinear dynamic simulations. You need a first order feedback loop. But then the other thing I realized is Bitcoin is thermodynamically sound money, and it's a thermodynamically sound network. The idea of thermodynamically sound is very important to an aeronautical engineer, because in order to create airplanes, you normally do all the modeling and engineering based upon assumptions of adiabatic systems. And an adiabatic system is a sealed closed system, and in a sealed closed system where energy doesn't leave or enter the system, you can solve all the problems. And so they say assume an adiabatic system, and it turns out that if the system is not adiabatic, if it's not sound and sealed, you can't solve any problem. And so the real genius of Satoshi was to create a thermodynamically sound monetary system. And if I give you the example, I give you a bathtub, there's a leak in it, or I give you a ship, there's a leak in it, or if I give you a plane and there's a hole in the fuselage, you know that, like, that's always the theme of the horror movies, the Titanic, or the window got blown out in the airplane, explosive decompression. All of the catastrophes are because you don't have an adiabatic system or thermodynamically sound system. The economic catastrophe, that's the analogy here, is hyperinflation, or the collapse of a currency. And so all of my engineering background at MIT was how to design systems that are sound, that work, a ship that flies, and a ship that doesn't, a plane that flies, a ship that doesn't sink, right? You see them in my house when you see the ships. the ships that don't sink, the planes that fly, right? Satoshi was a truly genius engineer, but you could also say Satoshi was simply a competent engineer. Satoshi designed a monetary system using semiconductors, public-private key cryptography, and the internet that was possible for the first time sometime around 2009. It was impossible during the time period of Hayek or von Mises, when all the Austrian economists wrote about this. They didn't have the technology to design a thermodynamically sound monetary system. So they used gold, which was an imperfect network and an imperfect asset. It's kind of like Da Vinci and Michelangelo, or maybe Newton, and Leibniz. They're genius scientists, and they want to design an airship. But if you don't have an internal combustion engine and petroleum, you can't make an airplane. The Wright brothers had petroleum and a motor, an internal combustion engine, and they could create an airplane. Maybe not so theoretically genius, but practically they made us fly. So Satoshi took all of the math, all of the engineering, all of the monetary theory that came in the hundreds of years or thousands of years before him or her, and created perfect money. And so I think my background, drove me to go to MIT. My education was as an engineer and as a systems engineer. By the way, there's another important point. Aeronautical engineers are probably the greatest of all systems engineers, because to create an airplane, you have to master civil engineering, mechanical engineering, metallurgy. You have to master electrical engineering, stability. And if you get anything wrong, the plane crashes and burns. And you can't, for example, you have to build an airplane with aluminum, even though the best material is steel, because steel is so heavy, the plane crashes. You can never fly a steel plane. And so you have to make a compromise. And the compromise is, I have a plane that flies, but it's not as strong as steel. When you're a civil engineer, you use steel, but the building doesn't fly. So if you apply that to money and Bitcoin was an engineered system with compromises. Like, well, why can't you just clear the transactions every 5 seconds? Well, because it's not stable, right? If you want it to be stable, then you have to clear the transactions every 10 minutes. And so, well, why can't you just have infinite block space? Well, because then it's not stable over time and the security collapses. Well, Satoshi understood that if you wanted it to be stable in time and space, there was a limit to what you could achieve. Just like, well, why can't I just have a 100-story building that flies across the ocean? Well, a civil engineer wouldn't know why you can't, but an aeronautical engineer would be able to explain exactly why you can't fly a 100-story building across the ocean, right? And so my background, I think, caused me to look at Bitcoin and appreciate the beauty of the engineering. And whereas someone that doesn't have an engineering background might say, well, I'm just going to hack together something which is smarter, faster, quicker, and easier, and you end up with all the other altcoin experiments. But what they don't do is they don't appreciate the thermodynamic, physical, mathematical, and systems limitations over time and space that a really good system engineer would understand. And so I think that all brought me to where I am today. And it caused me to look at this thing and say, oh my, Satoshi created the perfect monetary network, for the world. And it's like someone gives you steel, you want to build Manhattan. Someone gives you aluminum, you want to build an Air Force. And so I see Bitcoin and I say, oh, perfect money. What am I going to build? And, so far we've taken our company, with $1 billion market cap and built it into an $80 billion company just by building off of what I view as crypto steel.
Friends, DeFi is having a moment. Uniswap Labs web app and wallet connect you to the excitement. Swapping and bridging are simple, low cost, and lightning fast across 13 chains, including Base, Arbitrum, and Unichain, the new Layer 2 network designed for DeFi. Thanks to deep liquidity on Uniswap protocols, you get minimal price impact on every trade, now with even greater efficiency through Uniswap v4. Swap, send, on-ramp, off-ramp, and bridge into a bright future. Get started at uniswap.org.
While I was at your place, I saw one of your super yachts. It's called the Usher. And someone there said it referred to one of your greatest failures. So I was curious, why would you name a ship after one of your greatest failures, and what you learned from that?
Back in the mid 90s, I bought up a bunch of domain names, names like Usher and Hope and Michael and Mike and Speaker and Angel and Voice and Strategy, because I thought one day you could build businesses on these, because they're great words in the English language and everybody knows how to spell them and say them, and they have very powerful brands. And I had some singles and some doubles. You know, I launched some things. I sold Voice for 30 million and I sold Angel for 100 million. And then we launched alarm.com, and that's a multi-billion-dollar business. But then I launched a business called Usher on the Usher domain, and it was going to be a mobile authentication application. So it was a mobile app that was multi-factor authentication that you could use to seamlessly log into a website or authenticate a transaction, whether it's a financial transaction or a ticketing transaction. So it was this idea of public-private key cryptography in a consumer app. Because you couldn't rely on, and we wanted to replace passwords. Right? Passwords are garbage, and everybody knows passwords are garbage. You could almost think of it as like it's a software version of a signing device, like a Bitcoin wallet or hardware wallet. But we did it back in 2012. We didn't have the distribution channel, and it turned out that it was an idea a bit ahead of its time. And ultimately, what happened was Apple just kind of built login with Apple into their iPhone, and then Microsoft issued Microsoft Authenticator, and they just gave it for free to 100 million businesses. And Microsoft Authenticator has got like 1/100th of the functionality of Usher. But what I learned, right? What did I learn? Well, first of all, it failed, right? I thought it was going to be a multi-billion-dollar thing, and I named the yacht Usher while I was launching it. I didn't name it after it failed. I named it because Usher was mobile identity, and I thought it was kind of cute to name a yacht after my mobile identity, and it made a good name, and you can read the sign from a long way away. So it's a good handle for a boat for safety reasons and practical reasons. But what I learned from the endeavor is, sometimes you can overthink things. Like you're better off. The winner in that market was Microsoft and Apple or Google. Like people log in with Chrome, they log in with Apple, they log in with Microsoft Authenticator. The winner is the simple, brainless idea that has just enough functionality, replace the password, that you have the distribution channel for. You can jam it down a channel to 1 billion people or bundle it. And we were like the innovator with this, Swiss Army knife that did everything, but we didn't have the distribution channel, and it was a little bit before its time. So it's, I would say generally, Christine, maybe one of the things that made me appreciate Bitcoin is I probably came up with 20 ideas that I thought were the best idea ever. I went through this period, from your 30s to your 50s. You're like, I'm going to invent this. I'm going to invent that. I'm going to invent this. And whenever you invent something, you think it's the best idea ever. And then you don't know it isn't until the market tells you it isn't. And the market's going to tell you, most of them will fail. A couple may achieve a 100th or a 10th of what you thought. Occasionally you find a really good idea, but you shouldn't be so proud that you're not willing to embrace somebody else's idea if it's better. So the great irony, right? The great irony of life, and Elon Musk says sometimes the most ironic outcome is the most likely outcome. the irony of life is, after 30 years in business, after I created 20 ideas and after some succeeded and a lot of them failed, my biggest success is somebody else's idea, right? When and I wasn't even looking for it. I was kind of kicked in the back by a golden horseshoe, if you will. And so during the lockdowns, we had a problem and we discovered Bitcoin, and that was Satoshi's idea. And we kind of just grabbed it, defensively, because the choice was either that or a quick death or a slow death. So it was really like a life raft or a life preserver. And then it became an opportunity. And then it became a strategy. And then all of a sudden, in the past 12 months, we realized it was a really good business. We could build a really good business on it. And it wasn't our idea, and I didn't invent it, but the truth is we made 100x as much money for our shareholders and our employees and everybody involved as all the things that I invented. And so, yeah, that yacht behind the yacht kept the name Usher. It reminds me of something that I thought was a brilliant idea, but it didn't turn out that way. And it reminds you that even when you think you're 100% right, it's quite possible that you're not, and you probably ought to have the humility to appreciate other people's thoughts on the matter.
What advice would you give to a younger version of yourself?
First of all, embrace the new platforms of your generation that are going to change the world, right? So don't do what your parents did or your grandparents did, because they might have been insanely successful, and all your role models may be insanely successful, but they did something which made sense in the 70s or the 90s, or the 2010 timeframe. You ought to actually think for yourself and figure out what is going to be profoundly earth-shattering, what's going to change the world and create prosperity for the human race in the next 20 years or 30 years. And then, and what are those themes right now? They seem to be digital intelligence and digital energy or digital money or digital capital, whatever you want to call it, digital assets. And so start to study them, think about it, think about the consequences of that, make your own path, and then focus. And once you focus, figure out what you're going to do and be the best in the world at that. And I think that if you look at the classic pattern of failure of an alpha male, and I'm just going to single out alpha males because I am one, an alpha female could make the same mistake. It's in your 20s, you struggle to be successful, and then you succeed at something. Like you launch a business, you're a famous podcaster, you build out a niche, you're the greatest digital assets reporter. And then it goes to your head, and then you think, well, now that I've conquered this, what new thing am I going to conquer? And so then you expand and you launch the second business and the third thing and the fourth thing. And maybe everybody in the world wants to understand your opinion of digital currency. And then you think that they're also going to want to know your opinion of cooking and music, and you're going to be a movie critic. And the truth is, they probably don't, right? Like if you're lucky enough to be relevant in one thing in the world, you've already won the lottery, right? If you actually carve out a position where people acknowledge you as having a useful opinion or a useful service or a useful product, then you ought to put on laser eyes, right? My advice is laser eyes. Once you figure out what you enjoy, what you're good at, what's going to change the world, you ought to laser-like focus on it. Don't take it for granted, because so often people take it for granted, right? Napoleon ended up taking over France at a young age and brought peace to France. And he could have said, well, that was a 1 in a million likelihood. Like, how many people in the history of France ever actually stopped the revolution, brought peace and security to France? And instead he thought, well, I just got to conquer Spain, Italy, Germany, Russia, Sweden, et cetera. And of course, the result was ruin. and he accomplished nothing other than to get 20 million people killed. That's the Napoleonic complex. And I think I can't tell you how many companies they come to their end because they have one successful business and then they diversify and they launch the next four. And it's the same problem a parent has. You have a child and they get in their 20s or their teens and they don't turn out the way you wanted. So you think, well, I'll just start on another one and they will do it. And what people forget is that the common element in the relationship is you. And people always blame all of their problems on somebody else. And I think that the mature view is you look in the mirror and you say, I'm struggling in business. I'm struggling with what I'm trying to do. If you say, what is it that you're not doing that's keeping you from being successful? And then you focus inward to fix yourself. I think that's always much more constructive. And when you say, well, the customers are stupid, or the investors are stupid, or the market's stupid, or someone else is stupid, so I'm going to do the next thing. I mean, when you're in denial, I think you tend to just go and you pick a new thing and you never really can develop a core strength. So I would say have a laser focus on something, be humble. Don't assume that just because you've been successful in one field, you can replicate your success in 10 more fields. It's like even Michael Jordan, when he played baseball, he was a mediocre baseball player. He was the greatest basketball player, right? And the world's full of people that are extremely talented, extremely intelligent, that are laser focused. And so if you're extremely talented and extremely intelligent, but you're not laser focused, you're probably going to get displaced in the world.
There's no doubt that you are laser focused on Bitcoin. You've had a lot of opportunities to take money out of Bitcoin and profit, but you're not doing that. You're only accumulating. So I'm wondering, what is the purpose of all this accumulation in the end? Do you want to be a Bitcoin bank? I've heard words of that. Or, there will be a point in time where you'll have a lot of influence in the Bitcoin network. And having accumulated so much, what are you going to do with all that influence?
Bitcoin represents the most certain thing in the financial universe, right? And Archimedes said, give me a lever long enough and a place to stand, I can move the world. Okay? Bitcoin is the place to stand. I'm not trying to change Bitcoin at all. I'm just standing on it. The question is, what am I doing? I'm trying to digitally transform the capital markets. The world that I'm changing is traditional finance world. And here's my observation. Equity capital markets, for the most part, value companies based upon a promise, an expectation of future cash flows, which another way to say it is the companies have no money, but they promise to get some money over the next 20 years, and we estimate how much they're going to get, and that's the value of the equity. Our company's position is we actually have the money. Right. So we have the money now. Maybe you can value us at a premium, but right now the company is 65% or 60% of the market cap of the company is the money. Whereas if you look at a typical company like Apple or Microsoft, 5% of the company is money and 95% is just expectation that they might get money in the future. Why is that? That's because money is toxic if you're using bonds, treasury bills as a capital asset. So if the money that corporations hold is toxic, if it generates a 3% after-tax return, and if the cost of capital is 13%, then you destroy 10% of your capital a year. That means that every conventional company is capitalized on toxic money. And so my mission is to capitalize companies on virtuous, clean money. Right. And if you look at the fixed income markets, this is even more profound. Think about this for a second, Christine. A corporation borrows money because it needs money. And so I borrow $1 billion, but I don't have $1 billion. That's why I borrowed the $1 billion. And my credit rating is based upon my cash flows or my EBITDA. So the credit rating agency says, well, you don't have the $1 billion, but you have $100 million in cash flow. And so over the next decade, maybe you'll get the billion. So I'll give you a credit rating. So your credit rating is based on the money that you expect to get to pay back the bond. Okay. We're in the market with $10 billion or of, say we have $45 billion of actual money, and we want to borrow $1 billion. And a credit rating agency would say, well, you don't have any cash flows, so we don't know if we can give you a credit rating. And of course, the joke is, well, we actually have the money. We have 45 billion. We want to borrow $1 billion, or I have 5 billion in collateral. I want to borrow $1 billion more. I'm 5x over collateralized. You could literally give me a credit rating based upon the money I have, but the entire fixed income market, which is $300 trillion of corporate bonds, preferred stocks, structured instruments, and the like, that entire credit market is based upon credit ratings and the theory of credit that's based upon loaning to companies that don't have any money to pay it back, but they promise that they'll get the money in the future. So my company is issuing bonds and issuing preferred stock that's backed by Bitcoin. And our mission is to create a new theory of credit. Right? We want to issue billions, then tens of billions, then hundreds of billions, then trillions of dollars worth of credit instruments that are backed by real money. And that's what we're doing right now. We're the largest convertible bond issuer in the world last year. I would like to be the largest convertible bond issuer this year. And those convertible bonds are the highest performing, most sought after bonds in the world because they're backed by Bitcoin, by real money. You know, other people that issue convertible bonds don't have any money. They're actually just backed by future expectations of getting some money. And we just issued this convertible preferred stock called Strike, STRK. That's the first convertible preferred instrument ever backed by Bitcoin or any crypto asset. And that's the best performing one as well. And then we announced a $21 billion shelf registration. That's the first time anybody in the history of the capital markets has ever attached a shelf registration to a preferred stock. Okay, so what are we going to do? We're going to sell billions of dollars of preferred stock to a market, and it's going to be twice as good or 3 times as good as the existing preferred. So preferred stock investors get a benefit, and then we're going to buy Bitcoin, and our common stock shareholders are going to get a benefit, and the Bitcoin network is going to grow, and the entire crypto economy is going to grow. And so the long-term plan is just securitize the entire market. And last year we raised about $22 billion of capital. If we can raise 22 billion, then 40 billion, then 80 billion, then 160 billion, then 320 billion, we'll just keep raising more capital. And you would say, well, when is it going to end? Well, when we've got 1% of the fixed income market, that's going to be $3 trillion, Christine. And then it won't end, right? When we get 1%, we'll be going for 2%. And then we'll be going for 4%. So there's really no reason to ever end. And you're like, well, what is the value you're creating? And the answer is, we're giving all the fixed income investors an extra 200 basis points of yield every year with less risk, right? That's the value we're creating. We're basically rationalizing the equity capital markets and the fixed income capital markets. We're improving the credit quality and we're improving the returns because, like, for example, if you're holding $5 billion of Bitcoin and you issue $1 billion of credit instruments and the Bitcoin is trading with a vol of 60, there's like an 80 to 100 basis point risk that you'll be under collateralized in 12 months. That means that you ought to have investment grade credit, but the market's treating you like junk. So we can pay junk bond rates and offer investment grade credit, and someone gets an extra 400 basis points of boost, and we can afford it because our use of proceeds invest in a network that pays 30 to 60% a year, and then they benefit. And so what we're really doing is we're digitally transforming the capital markets to the benefit of everybody involved.
I want to just push back with what critics say, which is that if Bitcoin has a massive downturn, which has happened with the volatility, drawdowns of 90-80%, and there's less interest in MSTR bonds or equity. Could that force the company to sell Bitcoin at a loss to cover its debt, potentially unraveling the model? And they also criticize the stock's premium. It's often trading far above its Bitcoin holdings net asset value. Is that seen as a bubble ripe for bursting if faith in the strategy falters?
Yeah, we've learned a lot over the past 4 years, and I think we've built an indestructible balance sheet, right? If you think about what we're issuing, we're not borrowing money as on a junk bond or a senior bond that comes due in 5 years. We're actually issuing a preferred stock, which is a perpetuity. You know, you don't hear the word perpetuity that often. It means that we're never paying the money back. Like when we sell $1 billion of a preferred stock, we're borrowing $1 billion forever, for 1,000 years. So it's a perpetual swap, and it's a perpetual swap with no covenant. So Bitcoin could trade down 99%. There's no, I mean, people talk about margin call on X. There's no margin call coming. It's just not happening, right? The instruments that are constructed, you know, don't have Bitcoin pledged as collateral. And so we could take an 80 or a 90 or a 95% drawdown. We'd be just fine, right? What we've done is we've constructed the business such that the leverage for the equity comes from intelligent sources, and the most intelligent source is clearly preferred stock, right? Because it's like all the leverage you get from a bond, but none of the liabilities of a bond, right? Someone's going to give you money forever; you never have to pay it back. Think about it, right? It's like why if I offered to give you money forever, and you would never pay it back, and you know your friend said, well, don't take it because you might get liquidated if your investment, you know, draws down 75%. You're like, yeah, but on the other hand, I expect it to go up by a factor of 100, and if I take the $1 billion, I'll have $100 billion, and if I don't take the $1 billion, then I'll have nothing. So, and by the way, it's like there's no liquidation risk. So these are just, they're not really that risky instruments. It's very intelligent leverage, and the more important point is that this is an engineered company. The leverage that's generated by the convertible bonds is beneficial to the equity, and the volatility of the equity is beneficial to the convertible bonds, and the leverage generated by the preferred stock benefits the equity and the convertible bonds. And the more preferred we sell, the more strike we sell, the more leverage and volatility for the equity, which is beneficial to the options traders, which drives up the premium in the equity, which drives up the premium and the price of the converts, which opens up the convert market, which drives up the price of the preferred stock, which loops back into the capital market. So everything is reflexive or engineered to feed back into everything else. It's like an engine. And if you were to say it sounds like financial engineering, it absolutely is financial engineering. We've engineered a machine where it's almost quadratically reflexive, because when we sell strike, it creates more pressure to drive up the price of Bitcoin, which drives up the price of MSTR, which drives up the leverage of MSTR, which drives up the value of the options, which drives up the demand for the equity, which drives up the demand and the value of the converts, which drives up the price of and the demand for the preferred, right? And so you're like, the risk is what? Bitcoin trades down, and as I've explained, there are no covenants, no warrants, no liens, no liquidation rights. You know, and the truth of the matter is, Christine, we want Bitcoin to be volatile. Like things that are, when it's volatile, like our volatility is 100, we're the most volatile stock in the S&P index. That makes us the most desirable stock for a trader. If the volatility goes away, then it's probably not good for the equity.
Want market moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
Would you ever consider buying back strategy stock instead of Bitcoin using Strike ATM, or would you use some of the proceeds from the convertible bonds to pay the dividend on Strike?
I think we just keep every option open, and we'd never rule out any option. But generally, our view is when the equity capital markets give us a massive premium, we'll sell the equity. When the convertible bond markets give us a massive premium, there's massive demand, we'll go sell the converts. And when the preferred markets have a massive demand, we'll sell the preferreds. And our general strategy is just keep acquiring Bitcoin, never sell the Bitcoin. And then we will adjust our various capital markets activities. If we get too delevered, we'll sell more levered instruments, fixed income instruments. And if we get too levered, we will delever. And if we feel that the capital markets aren't really favorable to sell any securities, we'll just stop and wait. Because if I did nothing right now, if we did nothing, we have a $45 billion company growing 60% a year, which is better than every other company in the world, in my opinion. Find me another $45 billion company growing 60% a year by doing nothing, right? So we have a good option to do nothing. Our company's stock we've been growing 95% a year, right, to our equity shareholders. And the most sophisticated thing we do is a very delicate balancing in order to optimize the interest of every stakeholder. I mean, every creditor, the bondholders. We in essence have 6 different convertible bonds, a preferred stock, and the equity. And I will say we are very much thinking about those 8 classes of security holders. Like, those things keep me up at night. I will say, for the record, I don't worry much about people that are trading out of the money 30-day call options. So if you're a guy that's trading 30-day call options, with 20x leverage, we are not partners. I might do something that undermines your short-dated option position. Our goal is, over the long term, to create the most shareholder value we can for the common stock, but to treat every other class of security holder with respect and be very, very transparent and give them exactly what we promised to give them in the most responsible way.
I know you're buying forever, but maybe you can give folks a timeline that you expect to issue the full 21 billion of Strike ATM, considering you went through 17 billion of the 21 billion in 5 months, and when the plan was 3 years. And are you expecting to issue any more convertible bonds by the end of the quarter?
So, Christine, if you were to go to business school, I would say you could save your time, because I can boil business school down to the following phrase: keep your options open, right? The entire essence of business is keep your options open, right? Those 4 words. So you're asking me to commit the cardinal sin in business, which is close off all my options, which would be foolish. I would say moronically insane and stupid. So no, I would never, ever commit to doing something. What I would say is, the way we run the company is we create the most optionality as possible. We could sell $21 billion worth of Strike next week. If the demand was there under the right terms, we could sell it never. We could sell it over 3 years. We could sell it over 1 year. And the presumption that I know when I'm going to sell it, it's a mistake. Here's the mistake. Because generally you can sell a certain amount of securities in a time frame. I could sell $1 billion of equity tomorrow, but at what price? And so if you specify the time frame and the size, you have to give up the third variable, which is the price. And so if I wanted to tank the stock, I could make the commitment. So making the commitment is really dereliction of duty, because you're undermining the interest of your own shareholders and you're undermining your negotiating position. So if we look at our $21 billion ATM for equity, We announced that October 30th. We had the option to take 3 years. Well, what couldn't we predict? Well, we can't predict how enthusiastic the equity capital markets will be. We can't predict who's going to win the election. We can't predict how enthusiastic the market will be after the election. And so we created the option to sell a lot of equity in a hurry. What happened was a parade of wonderful developments. The markets rallied, Bitcoin rallied. We were able to sell $15 billion of equity with the stock price and the premium strengthening every single day. But we didn't know that on October 30th. Now, if you were to say, well, you should have promised to do it in 36 months, and you should have done it every day for 36 months. Well, you'd be a fool, because you had a chance to basically to generate a $10 billion gain with no risk in 4 weeks. And so if I said, I'll give you $10 billion, no risk in the next 4 weeks, or you can take 3 years and maybe in the third year, you'll get a $5 billion gain, but that way you won't have surprised anybody. Well, that's stupid, right? So if someone offers you $15 billion tomorrow and you're going to make $10 billion on the trade, take the money. That's my advice to you. But if you promise to do it tomorrow, the stock will go to $1 because everybody will front run you, and then you can't do it. So with all of these things, the key is we create optionality. If I were to promise you, guarantee that we're going to issue a certain amount of convertible bonds this year, I could do it, but at what price to my shareholders? It would probably be dilutive. So what you have to do is you have to open up your options. You have to be very nimble. Every day we evaluate the market. There are certain days when the Bitcoin markets are favorable. Sometimes the equity market is favorable. Sometimes the convert market is favorable. By the way, Christine, there are weeks where we could sell $1 billion of a convertible bond with a 4-year tenor, but not with a 6-year tenor. Like the market to sell 4-year bonds is open, and you can do that for 0 coupon, and the market for a 5 or a 6 or a 7-year bond is slammed shut in your face, and you can't do it. Or you can do this; it's going to cost you 10%, or you can do that and it's free. So the real key is the capital markets are multidimensional. I'll give you one more metaphor. This is what you learn if you're a nautical. If you ever sailed a sailboat or cruised in a yacht, it's like you get up in the morning and you say, I'm really excited. I want to go to the Bahamas. It's only 3 hours away. If the wind is blowing in one direction, if it's blowing, from the south to the north, the Gulf Stream lays down like a mirrored glass, and you can go across it and you wouldn't even notice it. And you'll be there in 3 hours, sipping your pina colada, quite happy. If the wind changes direction and it's blowing from the north to the south, you get a standing wave against the Gulf Stream. You're going to have 10 or 20 foot seas. If you get there, you'll get there with broken arms. Someone will have fallen off the ship. And the point is, if the wind changes direction, and if you're smart, you're not going. And if you're a fool, it's like the scene in The Wolf of Wall Street where the guy takes his yacht out in the middle of a mistral and the ship sinks. It's like, if you have a strong ego and you've decided you absolutely must do something, but the winds and the capital markets change direction, it's not going to turn out well. And humility is, you chart your path based upon prevailing winds and currents. And that's why, the naval greeting or farewell is fair winds and following seas, right? There's a direction to go. You go that direction. And if you go that direction, it's going to be a lovely time and you're going to have extraordinary success. But when your ego gets in the way and you make some plan and you declare you're going to do it come hell or high water, you're going to slam into a wall of water in Mother Nature, and it's just not going to work. And so I don't give that kind of guidance because it's just unwise to do it. It would be not in the best interest of my shareholders or stakeholders. And that's not the way to run a business, right?
What's the difference between corporate treasuries that don't hold Bitcoin and those that hold 1 million, 5 million, 10 million? And when do you see the Fortune 500 companies really getting into the Bitcoin corporate treasury game?
We seem to be adding 1 or 2 companies a month right now. There's 70 on the HODL list. I think we'll probably get to 100 at some point. I think it'll grow exponentially. We'll get to 200, maybe we'll get to 400. 4 years from now, maybe 10% of companies might, 5 or 10%, might be 4 to 8 years. The thing that slows it down, that slows down institutional adoption is you have to have a company with a need, so well-run companies that are conventional don't have a need to change, and so they'll be resistant. And then also you need institutional grade custodians. You need to have major banks that are banking all these companies. They have to hold Bitcoin, buy it, and sell it. So I think that corporate adoption will accelerate once JP Morgan and Bank of America and Citi and Wells Fargo and the like, once they're in the space, and that will ripple everywhere in the world. And initially it'll be small amounts, like 5% of my treasury or 10%. It'll start to go like that. The really big companies, the big tech companies, will probably be the last ones to embrace it because they have the least need, right? This is a perverse irony. The better the business is, the less likely you are to adopt this new innovation because you don't have a need. It'll be the zombie companies that have a need, that have an open mind. In the 70s, who embraces rock and roll music? Okay, it's the teenagers and the 20-somethings who want to make a name for themselves. They want fame and fortune, and they're not going to go, be conductors in Carnegie Hall, and then the 65-year-old Carnegie Hall conductor who, the Bernstein or the whatever, who's theoretically the better musician, they're not going to pick up the guitar. They have nothing to prove, right? They've got a life of success based upon a different paradigm and a different set of techniques. So, Bitcoin is a solution for the Gen Zs, for the millennials. Whenever I go to a conference, if I go to a conference of 100 rich families, it's the 20-something sons that know me. I'm a rock star with the 20-something and the 30-something sons of billionaires. They all know me. And they're like, oh yeah, you got to talk to my grandmother. You convinced my dad, my grandfather, et cetera. They won't listen to me, right? So I think that you're going to see it trickle up from the small companies and from the newer companies run by the innovators, and then gradually, the next group and the next group. And there's something very equitable about it. It's like, do you really want the rich, powerful, successful people, the arrogant ones that have everything? Do you really want them to be the ones that get rich off of this? They don't need it. Well, why should they get the benefit, right? What you want is for the people starting their career, or for those who are hopeless, right? Give me you're tired, you're hungry, you're poor, right? The people that don't have a chance, you want them to be the beneficiaries. And so I think they're the ones that will embrace this, and it'll be progressive over the next 10 to 20 years.
What does ultimately the future of digital finance, where's it headed? And how do people work and transact in this future?
The one thing that we have universal consensus on is that Bitcoin is digital capital, and it's a digital commodity, and you can own it and hold it forever, and it will be beneficial to you. And that's a solution to every family and every company on earth right now. And we have clarity on that. The future of digital currencies, digital tokens, and digital securities should be 80 to 90% clear once we have this digital assets framework or the Market Structure Act sometime in the next 6 to 12 months. So hopefully by the end of 2025, we have clarity from the U.S. regulators as to what you can do, like how much utility can you put into a token, who can issue a digital security, who can issue a digital currency, how much friction will there be on those things. Once we have that, then I think we can have a very interesting conversation about what the consequences or implications of that are to entrepreneurs. What's Apple going to do with digital currency and digital securities and digital tokens and digital capital in the iPhone? Like, what's Google going to do? What's Meta or Microsoft going to do? What should you do as a startup? What will the AIs be able to do? There's a lot of interesting outcomes, but we are still we've got a gray market here, right? You don't have any legitimate path to trade, custody, or issue any of those things until the US government has codified into some code, hopefully into law, those rules. So having said all that, what do I think will happen long term? I think we'll get that framework. And then I think the future is going to be millions and millions of digital assets moving at the speed of light, millions of times an hour or a second. I think you're going to see profound innovation in wallets and exchanges. You're going to see AI infused. Maybe I'll have Bitcoin in an AI wallet, and the AI will basically, loan out my Bitcoin to 87,000 counterparties every second and then fetch it back and reconstitute it. Or maybe it won't, right? And then you'll see AIs capitalized on Bitcoin. Maybe you'll see an AI in cyberspace that offers legal advice to everybody in the world that takes Bitcoin or takes stablecoin and is capitalized on Bitcoin that floats in a transnational way. Maybe you'll see tokens that offer utility that is powered by AI. You could imagine a smart contract DeFi market like a Uniswap, but there are no people. There's just an AI that's offering a trading market that floats in cyberspace, that's capitalized with Bitcoin, that trades 10 million times a minute, that is continually evolving. I think there'll be all sorts of interesting things, interesting opportunities, interesting products and services. The free market is a Cambrian explosion and mutation of life forms, and most of them will fail, right? 99% will fail, but you will see out of all that mutation, you'll see extraordinarily powerful life forms that will arise. And I'm the optimist. I think that human beings will get products and services and capabilities that are 100x, 1,000x, 1,000,000x better, cheaper, faster than anything they ever had before. And I think the world will be a better place. But ultimately, I can't give you any more detail than that, because the free market. The free market is by definition free and chaotic, and that's what makes it virtuous.
Friends, DeFi is having a moment. Uniswap Labs web app and wallet connect you to the excitement. Swapping and bridging are simple, low-cost, and lightning-fast across 13 chains, including Base, Arbitrum, and Unichain, the new Layer 2 network designed for DeFi. Thanks to deep liquidity on Uniswap protocols, you get minimal price impact on every trade, now with even greater efficiency through Uniswap v4. Swap, send, on-ramp, off-ramp, and bridge into a bright future. Get started at uniswap.org.
What are some books that people should be reading? And what philosophers do you subscribe to?
I think anything by Rothbard, Austrian economist, but especially everything by Rothbard. I mean, history of whatever, money and banking, Austria, history, Austrian economist, history, just a history from an Austrian economist point of view. All the Rothbard stuff is really good. I think, and just general history, Durant's history. Read The Story of Civilization, every volume, beginning to end. And I think that I think you can't go wrong. And I guess probably, if you want a third category, read biographies of every innovator. Read the most in-depth biography of J.P. Morgan, Rockefeller, Andrew Mellon, Carnegie, Edison, Newton, Leibniz, right? Voltaire. right? Because I think that when you're just going to first person sources, you have the history. Of course, there are a lot of versions of it. Then you have you have the struggles of the individuals, and then you have the economic theory. I think all of those things position you in order to make rational decisions in the modern world.
All right. Thank you so much for this grand interview. I really appreciate it. I want to end up with one last thought, if you will. When you die, I don't think you're going to say, I wish it brought my shareholders more value. So what is your goal in all this, and what will ultimately bring you happiness, Michael?
Bitcoin is an ideology that spawned a protocol that created an asset that circulates on a network. The ideology is sovereignty, sound money, freedom and property rights, right? Dignity of the human spirit, ownership of your life force, economic sovereignty, and immortality, right? That's the ideology of Bitcoin, right? And Satoshi gave us that. And so, if I were to boil down my mission is I want to spread the ideology of sound money, sovereignty, economic freedom, economic immortality, right? What if I told you you could live forever? That's the basis of every religion, isn't it? Well, I'm not going to give you that promise. That's been done, and there are other people more qualified than me to talk to you about immortal life. But I think what Satoshi is offering us is economic immortality. You may not live forever, but your economic energy will live forever. And if your economic energy, if your capital lives forever, maybe that means your ideas live forever, right? Because if I've got an asset that'll last 10,000 years, I can capitalize an AI in cyberspace, whatever, and digital Saylor can spout, things for 10,000 years. What is it you believe in? What is your value? Right. And if you have a value, right, if your value is you want to preserve a park forever with money, so you leave your money to an AI capitalized by Bitcoin, and the park, gets preserved forever. Maybe you get to see your ideas preserved forever. And you know what? If you don't have a single idea, like maybe digital Saylor is arrogant and the park will come and go, then you have the option to convert as much wealth as you can into Bitcoin, like Satoshi did, 1 million coin, and burn the key. And so should you raise 1 million, 1 billion, 1 trillion, or whatever, and if you burn the key, you will have made an economic contribution pro rata to everyone else in the Bitcoin network forever. You will have empowered everybody else. Everybody with 1 Satoshi will be that much richer, and you will have made that contribution. And that strikes me as being a much more ethically proper, ethically sound form of charity. Like you've got centralized charity. I give the money to a charity run by someone that may spend it the way I want. But let me tell you, if you leave your money to a charity 100 years after you're dead, they'll spend it on something you wouldn't want them to spend it on. It'll be corrupted, right? You can figure that out. That's true. So how about decentralized charity, which is you'll just leave your money to the human race, and everybody that believes what I believe, right? I believe in Satoshi and his vision, sovereignty, property rights, freedom, economic empowerment, economic immortality. I believe nobody should be able to steal your money. I believe you should get to keep it. And so if I believe that and I burn those keys, then I have made everybody in the network that much richer and more powerful forever. And they have the option to do the same, or maybe they'll use that power for good in a way that they deem to be appropriate. And you're like, well, who'd you give the most power to? I gave the most power to the person that believed the most what I believe, right? I mean, everybody has the choice to join the network with $1, $100, $1 million, $1 billion, or $1 trillion, right? So everybody gets to join, and we're all in it together from now to eternity. So yeah, that's my legacy.
I guess that begs the question, would you ever burn all your Bitcoin?
I think that I've just answered the question in the most responsible way that anybody would ever answer the question.
All right, we'll leave it at that.
Okay.
Michael Saylor, thank you so much for this incredible interview. We went through the present with what you're working with and the Bitcoin Strategic Reserve, U.S. policy, your past, going back to Air Force bases and getting inspired by exploration and MicroStrategy to where you are today with strategy, and the future, which is very exciting with the evolution of digital finance. So thank you so much for sharing that with us.
Yeah, thank you, Christine.